Yes, well, good morning, ladies and gentlemen, and again, my thanks to Kai and his team for inviting me to speak to you today, and hopefully I'll have some good perspectives for you along the way this morning. Yeah. Okay. So I've been asked to talk about some of the global trends in the industry going forward, and so I'm going to focus on some key markets. Basically, for those of you that know me, I ran wood markets for 25 years, and we've sold the business about 18 months ago to Forest Economic Advisors. So I'm now working for them. First time in 25 years where I actually get paid vacation. So interesting development. But I'm working with a bigger team, and they're economists. They have a much different view of the world, and so together we have a very interesting perspective. We're still doing our usual multi-client studies on various global topics. And today I'm going to talk a little bit about, when I talk about China, we just did a report last fall looking at the 5-year outlook on China. And we've just done a report on Russia, our fourth report. That was released, I think, yesterday. So that's just fresh out. Okay. Okay, I'll try. Yeah, that's better. Now I can hear myself. So I'll bring that topic along, or that report along, as part of our discussions. Anyways, the outline I'm going to talk about is briefly some global trends. I am going to talk about North America because that's pretty fundamental to a lot of our businesses and impacts a lot of different things. I'll touch on China. We have a China speaker this afternoon, so I'll just give a few perspectives and talk a bit about how the Russian industry is what we see going forward. And then I know Kai always asks me to talk about some of the competitiveness work we do about Finnish sawmills, so we'll wrap up with that section. How many of you have heard of the TV show South Park? Is it also, so you get it over here, okay. I don't know what you call it, it's a very strange show, but they did a feature on Canada a while ago. And just like, when we heard all about the Finnish rakes, forest rakes that came out a while ago, well, when we heard about this show featuring Canada, that's when I first watched it. And I can't remember what the show was about, but the theme of that show was Blame Canada. The whole is a song involved and everything else. And as I kind of look at the global industry a little bit, I can see there's reasons why you want to blame Canada a little bit with regard to wood markets, and perhaps even more specifically, more BC. Seems to be a lot of BC, British Columbia industry doing things that are sort of affecting world markets, not directly, but maybe indirectly. So when I talk about blaming Canada, I mean, if you want to blame somebody, you can blame Canada today, but blame somebody else tomorrow. But, the mountain pine beetle, we get blamed for the mountain pine beetle. I mean, the mountain pine beetle is part of climate change, and with, when I was a young forester, we saw mountain pine beetles in the forest all the time. But with climate change and warm winters since the early 1990s, this thing took off. And so the industry blames us sometimes. Other industries blame us for all this cheap wood that became available, just like when you get storm wood here in Europe, you get the advantage of some of the cheap wood and so forth. That was something that the Americans certainly blame us for mountain pine beetle wood. And of course, also that then caused, we also get blamed for forest fires because some of the forests burn quicker. And then we also had cold winters. We had cold winters the last 2 winters. Right now it's very cold in Vancouver. And this is where some of these impacts are going to show up now in the markets with delayed logging and slower rail car services, just like we had last year. But we get blamed for cold weather. In fact, I was in the U.S. last week, and all the people we were talking to were saying this Arctic air coming down from Canada is ruining our climate. It's like, it's not our weather, but we get blamed for the weather. These sort of things, right? So, blame Canada. But probably it's more of the market volatility that I think is the big issue. This starts off with, the government of Canada owns 90% of the forest land in Canada, and how they manage that is complicated. Same thing happens to some degree in Russia, which is the other big country with mainly or exclusively government-owned timber. But this has caused the U.S.-Canada trade war, which has been going on for almost 40 years. Still no settlement, but that's an issue. And this then causes price volatility with deals are on and deals are off and so forth. And so we've seen more of these sort of factors coming along where the big industry, the big exporter is British Columbia. So sometimes when the U.S. prices are low, we shift markets. So lately going to China and so forth and shifting back, and that causes all kinds of dislocations. So we saw that in the first half of the year when the U.S. market was very strong last year, shipments to China dropped again, but as soon as the prices went down in fourth quarter, volumes to China went up. So the BC guys are sort of screwing up the markets, so blame BC. We're also getting indications that some of the eastern SPF mills are thinking of coming back to Europe because U.S. prices are low. So again, we can blame Canada again for that, trying to move around in the markets. But and even I talk about the Rolling Stone. So the 6th or the 7th Rolling Stone. Anybody ever heard of Chuck Leavell, musician Chuck Leavell? So a few of you. So Chuck, well, maybe a handful, but yeah, Chuck Leavell is a pianist, keyboard player. He's been with the Rolling Stones since the 1980s on all their tours and all their albums, and other bands as well. But his claim to fame, besides being a kind of another Rolling Stone, he is a tree farm owner in the U.S. South. And so he has been quite vocal about developing plantations and so forth in the U.S. South. And more recently, he's blamed Canada about, first of all, you had all this cheap wood coming down, and we put duties on you to stop it. And now you're buying up all the mills, and you're screwing up the log market, so I can't get the high prices I thought I would get. So he is blaming Canada as well. So anyways, there's a theme there, I think, about we get blamed for a lot of things, and some of it's maybe tongue-in-cheek, but some of it's maybe true because of the swing volumes that the BC industry gets involved in. So that's just a perspective I thought I'd start with. But overall, when I say to sort of consider the takeaway messages for what we see going on in the industry, on the supply side, in North America, as we've seen for a number of years, there is not enough timber, there's enough timber, there's not enough sawmills in North America to meet demand. That's been a fact that we saw coming for years, and it happened, we thought it might happen actually this year, but it happened last year because of some supply constraints at the beginning of the year. But that's not going to change for the next couple of years. We need either more production faster, which we can't do, or we need more imports, which need high prices if you're European operators. So that's something that we expect to see in the next couple of years, meaning the market should be good for the next couple of years. We also watch Russia pretty carefully. The log export tax is changing things, and they are gaining more competitive advantage, whether it's the ruble or whether it's the One Belt, One Road development they're able to utilize now with China, but they're basically gaining market share. In Europe, of course, we've seen a good market last year, but the exports slowed down to China, and they've now slowed down to the U.S. because of prices, but perhaps this year we'll see some uptick from current levels as prices improve. But we still look at China. It needs more imports, even though the economy is slowing down. They will need more imports, especially softwood logs, softwood lumber, because they don't have enough to meet their demand. So that's still the positive sign that we see there. The prices are a different story perhaps, but they certainly need the wood. And overall, as we've seen for a number of years, we see a tightening timber and sawnwood supply base relative to increasing demand. So that's a story that we don't think is going to change dramatically for the next few years. On the demand side, in North America, we do see demand exceeding supply at times of the year, just like it did last year, probably too much at the beginning of the year, and then the exact opposite at the end of the year. But already we're seeing volatile prices as supply and demand is moving around. I'll touch about that later. But in Europe on the demand side, demand had been improving. It's probably going to slow down a little bit going forward. But nevertheless, Germany's got some beetlewood, and the Czech Republic. That may change things a little bit and make pricing a little bit tougher. But those are dynamics anyways. And back to China, they need more wood for their value-added sector, especially furniture. That's a good fit from Finland in particular. So that's an opportunity. Other markets, Japan is always a big import market, big export market, and things are stable right now. We know the demographics is changing, so that will be a slower market over time, but nevertheless, it's good right now. And then other markets are all in play, and they need more imports as well. So overall, we expect market prices to be, relatively on the volatile side as we go forward, as these tensions of supply and demand continue. And again, lots of wild cards ahead. We heard some earlier ones today, but again, it's all over the map what the wild cards could be, so I won't touch on that topic. But the trade wars are the one that worries me the most right now between U.S. and China, because that's an unknown, and that will affect our business. So I just wanted to talk briefly about some of the global trends, and what we've been watching for a long time now is what's happening with the softwood log supply, coniferous log supply, and we know that there's deficits in China and India. They need more imports. In Canada, just to remind you that in case you're not aware, the Canadian industry is shrinking. We've seen the timber harvest declines in BC are going to be almost at 20% now from where they were in 2000, and that's a permanent change. There's no growth, no rebound out of BC coming. Quebec has had a 35% decline since 2000, and Ontario's been down 5 or 10%, but they've dropped 35% since 1994. So the industry out of Canada is a much smaller industry because we don't have the logs. We have lots of mills, but they're all closing because of the lack of supply. Globally, of course, we have supply constraints. I mean, Russia's got lots of timber, but they don't always have economically accessible timber. As the ruble devalues, of course, that makes it more attractive. And then, as was touched on a little bit, Western and Eastern Europe, there's lots of timber around, but can you get it at market prices? Sometimes you can't get the supply because prices, they wait for the prices to sell at higher levels, the private timberland owners. So really, the growth of natural growth timber is really shrinking, or certainly not growing, and it's the plantation pine from the southern hemisphere that's really growing every year. It's gaining importance, but it's not for structural applications. It's more for non-structural applications or engineered finger jointing work and that sort of thing, molding and millwork. So that's not the solution in many cases, for structural timber. These are just some charts we update every year, and I guess the takeaway message is that globally we've seen steady growth since 2009 in consumption, and that's been matched with production. So those trends we think will continue for at least a couple of years until the signs of some recession loom into place. And then looking at global saw and softwood exports, again, the major players are shown there. Canada's the largest exporter, followed by Russia. And so that's the blue is Canada, and the yellow is Russia. And then in Europe, the largest exporters, as you know, would be Sweden, Finland, Germany, and Austria. So they're all in play. But some of those exports are between countries, probably less so in Scandinavia, but more so in Central Europe. And the USA is a largest producer, but it's still a relatively small exporter. They're about 9th in the world, only 2.7 million cubic meters in 2017. And talking about prices, these are some of the global indexes, prices that we track. So on top we have Japan prices are the highest. And of course, they spiked last year, not because of the demand, but more of the tight supply. So a lot of the Canadian prices went up dramatically there because the U.S. prices went up in proportion. So we see the green line. You see the U.S. prices going way up last year and then crashing way down. So that's I'll talk about that some more. And then the European prices, they were at one of their highest levels since 2013 in U.S. dollars anyways. And then the China index is kind of going along. Mainly there's lots of supply in China, so those prices tend to be pretty competitive, and but they went down last year as well. But that's the overall trend, peaking last year about the middle of the year, and then pretty much all markets easing. And one of the things I like to do is compare North America with Europe. So if I look at these graphs here, you can see that on the left side here, Middle East, North Africa, of course, you know, is the big market out of Europe. But looking at North American exports, it's tiny. It's pretty much insignificant. When we look at China from Europe, it's relatively small, but been growing rapidly. And of course, Canada in particular ramped up dramatically after 2009, but they've been coming off over the last few years, and I'll explain that later on. And then Japan is pretty stable, slightly growing out of Europe, and Japan is relatively stable but slightly declining for North America. So that's kind of how we compare the industries. And a little bit of wood goes to the U.S. from Europe, but it's increasing because of high prices, and European exports from North America are declining, so no real growth there at all. So I'm going to switch over to the U.S. market and just talk about some of the things that we see there. Again, the blue line shows the pretty steady growth that we've seen since 2009, and going forward up to about 2022. This is my corporate office forecast. They're predicting a recession in 2023, so that's their story. I think that's a bit bullish. I think it's going to be sooner myself. I'm worried about 2020 as well, but maybe earlier. But nevertheless, that's their view. They think that there's a long-term potential, and it's tied to a lot of demand fundamentals as well, which I'll touch on. And same with the overall with the OSB and plywood combined, steady growth in that sector as well. So. Again, it looks pretty good, you know, as it has been for a number of years. And you know that it can't go on forever. That's why I get worried. You know, at some point it's going to correct, and it won't be any fun. But this is part of the rationale for the forecast, is that, you know, the housing market collapse in 2009 was because of too many homes, and so that was back here in 2009. But when you look at where housing starts were in 2017, and they're a little bit higher in 18, you know, this corresponds with the recessionary lows in 1991 and in 1982. So we're still way below traditional housing levels, and this is the level we should be getting to, about 1.6. So that's why we can predict there should be lots of room for growth just on the housing market. And the housing starts have slowed down somewhat, but they're expecting next year to be a bigger increase. So things look pretty good. So that's part of the fundamental reasons. We're way below where the housing stock should be going forward. When I talk about U.S. lumber production, there's only one region that can produce lumber, and that's the U.S. South. They've got the trees. They don't have the mills. There's some 20 new sawmill projects underway. I think it's a dozen or 15 greenfield mills, and another 6 to 8 many upgrades as well, some serious upgrades. So they're going to be adding about 1.6 million cubic meters a year going forward for the next 3 or 4 years. But the growth in consumption is more like 3 million cubic meters a year. So that alone is only going to cover half of the increase in demand. The U.S. West is growing slowly, but they're constrained by high log costs, log exports that go to China and Japan. So they're restricted. So the U.S. cannot produce enough lumber to meet its needs going forward, and therefore they need imports. And imports have traditionally come from Canada, but you can see, you know, going back to the last peak in 2004, 2005, Canada had, you know, 50 million cubic meters of exports to the U.S. And recently we're down closer. We're going to be down closer to 30 or 33. We don't have the production anymore, so we can't grow. And even last year, we had record level prices in the first half of the year, and Canadian exports to the U.S. dropped. last year. We don't have the production with mills curtailing. So that's why the U.S. cannot turn to Canada like it did in previous cycles, because we don't have the timber and therefore we don't have the lumber. And so it's got to come from somewhere else, and it's got to come, therefore, offshore. And I'll get into that now. So when we look at some of the other sources of imports, the top graph is showing the non-Canadian imports. So again, peaked at almost 7 million cubic meters the last cycle, and it's on its way up, but we don't see it ever getting to that level. And this is the European imports on the bottom graph. And again, peaking at about 4.5 million cubic meters last cycle, and currently heading towards 2 million. So with a strong price in the beginning and a weak price at the end. So not sure what the appetite is going to be for Europeans this year, but certainly be a little more prudent, I think, with their business. The in 2018, Germany's about half of the European supply to the U.S. market, followed by Sweden at about 20%, and then Austria and Romania at about 10%, and Finland's down about 2%. So I know that that's a tougher market to get to. You don't have a lot of planers and so forth, and you have higher log costs. So anyways, that's the kind of the play with the European business in the U.S. market. And just touching on the Canadian story, so again, with the mountain pine beetle basically reducing the timber harvest by about 20%, that means we've lost about 20% of our sawmills as well. So we've closed about 26 sawmills since 2006, and we figure there's another about 4 more to go or so. So we will have to close about 30 sawmills, and in 2000 we had about maybe 110 sawmills. So it's about 20% of our sawmills or more have had to close because of this mountain pine beetle. Without the wood, we've had the closures. So on the graph, you can see how the BC production has come off since 2016, and we expect it to drop as less wood is available and a few more mills close along the way. So it'll have less production going forward. The BC coast is a perplexing region. Its production's been relatively stable for the last few years, but there are some growth areas and some reductions as well. So they typically have a high cost log like in Finland, so they have to add value to make their business work. And of course, with BC Interior representing about 45% of Canadian production and 85% of exports, BC is a key market to watch, or key supplier to watch, because where it's going to go is going to impact export markets. So when we look at our outlook for the Canadian softwood lumber supply, it's pretty clear that the production levels going forward are probably, they've dipped in 17, and they've dipped in 18, and we're probably going to bottom out somewhere in the next couple of years. But it's a flat production outlook, so you can see, compared to the previous cycle when the U.S. housing market was going strong, Canada followed along, and we maintained our market share at about 32 to 34% of U.S. consumption. Currently, we're somewhere around 27% of U.S. consumption and dropping. So that's because we don't have the production relative to the U.S. demand. So that's a key trend that we see going forward. And when I put everything together, put the U.S. and Canada together, we see that the trend is pretty straight going up in terms of the total shipments in the blue. The change though is you can see that, and maybe you can't quite see, but the top bar is the imports, total imports, and here you can see it's growing slowly. We think it has to get bigger because the increase in production out of the U.S. South and out of Canada is not enough to meet demand, so we have to have more imports. So that's kind of the story we see. And conversely, the bottom line here, we see Canadian or North American offshore exports declining because more of the wood has to stay in the North American market, because that's where the prices are going to be higher to keep the wood there. So that's a key trend that we see as well. And just looking at Canadian offshore exports, which is really BC exports, really, the volumes to China have been declining since 2013. And I get asked that question a lot. I read a lot about in the press that Russia is taking market share away from Canada and so forth. But I'll explain that story a little bit more. It's pretty simple when you actually look at it. But basically, Japan exports are going to be flat, and other markets relatively flat as well. It's what we see going forward. And this just highlights BC. The bottom graph is similar to what I just showed you in terms of export markets. And then BC exports, again, the U.S. is the majority. But you can see how much we shipped to BC back in the previous cycle and how little we're shipping in this cycle. It's about almost half the volume because we've diversified away from the U.S. market because of the tariffs that we have. Currently, the tariffs as of January the 1st last year, they were 20.2% on all shipments to the U.S. So that's caused more of a diversification away from the U.S. market. So this is this crazy price cycle we've seen in the U.S. market last year. And I predicted this. In 2007, I predicted this. I thought it might occur in 2015, but it took a little longer to get there. But we figured we'd see record level prices because of the lack of supply versus demand in the U.S. market. But it finally kicked in. That's why we're still bullish going forward. But so we had all these logistical supply delays, again, in BC, so blame BC, with cold winter weather, and previously we had forest fires, and then we couldn't get the shipments to the U.S. market, and prices shot up dramatically because of the lack of supply. And then once all that supply started to move, when the warmer weather came, it all arrived at the same time, and that caused prices to drop to below break-even levels. So we've had a lot of mill curtailments in the last 2 or 3 months as prices plunged. But and it's interesting too with prices because we're used to this volatility, and I think in Europe you're not. But it's last November, early November, there was a conference. The FAO had their annual conference. Instead of Geneva, they had it in Vancouver. And I took some delegates out for dinner, and they talked about how this crazy cycle. How can this happen? And I tried to explain it, and they said, "Well, where are prices going to be going?" And my response was, "Well, relative to mid-December, early November, I said in the next 3 months we should see prices 40 to 50% higher." And my wife was with me. And she kind of wrote this down and pinned it on the fridge and said, "That sounds pretty crazy to me. How can you predict that?" Well, I can tell you that after nothing happening for about 2 months, prices have now moved up, and they're at board feet $417 a thousand, which is 39% higher than when the meeting was on. So we could see that was going to happen. It wasn't sustainable. But anyways, we think prices will hold for the next little while. And we think it should be a reasonable year, but they will be volatile as supply and demand factors jump around. And remember that starting in 2018, the Canadian mills have a 20% import duty they have to pay. So these prices are always less 20% in the last year, which is a big hit. And so the question is, why have there been less SPF shipments to China? And well, to me, it's about the price. It's pretty simple. And this analysis just shows that back, you can ignore the top line. That's just the J grade price. But these two lines here, the price to Chicago and the price to the price to Chicago and the price to China, they were always about the same for the last. Up until 2015, and then starting in 15, this gap widened, and so if you get higher prices in the U.S. market versus China, where do you ship? You ship to the U.S. market, so our volumes dropped to China only because we could get better returns elsewhere, and that's what's happened. And somewhere around here, in the end of the year, Of course, these prices, you still got to pay 20%. So the returns selling to China became better than selling to the U.S., and that's why we saw more SPF shipments moving into China for the first time in quite a while. So it's just market forces that are driving some of the decisions of the Canadian companies, but they do want to hold their share in China as much as they can. And the black line on the bottom just shows the premium they were able to get in selling to China over time, which reduced the exports to, or the premium in the U.S., and that reduced the exports to China. I just want to touch briefly on China. There's a speaker this afternoon on China, so I don't want to talk too much, but the key trend is, because I'm going to talk about Russia in a minute. So the Russian log exports in the orange have been declining to China, and New Zealand is the big winner in that along the way. So that's just a key trend to see what's happening with imports, and they increased last year, much to our surprise. But that's the market. The Chinese prefer logs over lumber, depending on the price. So that's what we see there. And then just switching over to lumber, which is a little more interest for the Finnish industry. Again, we see the Russian volumes really increasing, and the Canadian volumes decreasing again for the 5th consecutive year because of opportunities elsewhere. And then Finland is now the number 3 supplier to China, followed by Sweden. So the Europeans have definitely made their mark in the market. And I've been traveling a lot in China and Russia the last year, and I know why the Finnish volumes are down, because we're talking to some of your customers, and they're saying, well, they love the Finnish wood. There's just no question. That's their preference. And but they said the Russians are getting more tuned into what they need, the grades, the sizes, and so forth, and it's cheaper. And the Chinese, as we know, will respond to price. And the Russians have got some of their act together, but it's not the Russians. We talk about Russian lumber in China. About half of our estimates are about half of the lumber in China from Russia is coming from Chinese mills in Russia. People don't know that. And it's about that. In certain regions it's probably more than 50%. Other regions, not so much. But it's the Chinese mills that have figured out what their Chinese customers want, and they're able to produce what they need to get the volume going, and they're making very good margins, I can tell you that. So, and I know, looking at some of the Finnish costs and some of the Finnish prices, I know why you can't sell below a certain price, because it's starting to create negative margins. So anyways, that's the simple reason, is the Russians have gained a competitive advantage. And I say Russians in quotation marks because it's a lot of it's, in your case, your competition in China is not Russian-owned mills, but probably Chinese-owned mills. That's something that we've learned from our travels. And so what's been happening in China that actually supports more of the Russian advantage is a lot of the older mills have been closed along the coastal regions. And in fact, in Tianjin, 95% of the older mills had to be closed and either upgraded or moved. Usually that means moved. And sometimes they move to industrial parks that are nearby, but more often they're moving inland where they can set up and get close to the One Belt, One Road rail system. And similarly in Shanghai, about 70% of the mills have been closed, and so moving inland. So it means that your market now is more inland. So if you're coming around by container or to Shanghai or other ports, you've got to move more of your wood inland, and that's costing you more. Meanwhile, the Russians can get there a lot cheaper. So they're gaining competitive advantage as well, just on logistics. That's another big change. And I'll come back to the China advantage, or the Russia advantage in a minute. I just want to comment, the China supply chain is changing, and the study we did last year really brought that out. It's really changing about where the wood's coming from, where it's going to, where it's being consumed, and how the end uses are changing, and how the Chinese have really figured out where they can buy effectively for their markets. And a lot of this is driven by the Chinese government that accidentally puts the advantage very firmly into the Russians' hands because of all the movement inland where they can access it more economically by rail. I wanted to talk about the U.S.-China dispute a little bit, but this just shows the U.S. softwood lumber exports to China. Not huge volumes, but sort of bouncing along the way. But you can see here in third quarter, this is now after the tariffs first started. The U.S. business pretty much has kind of reduced itself dramatically, and I haven't seen the data yet for fourth quarter, but we expect it'll be down as well. So obviously the U.S. is being impacted negatively by these tariffs as well, and it's showing up in the trade data. But the tariffs, if you're not familiar with them, so back in August, the first tariff that came on that I missed was the southern yellow pine logs got a 25% tax or tariff, and that's still in effect. And then a month later, then the rest of the logs, hemlock and Douglas fir and spruce logs got hit, typically with 5% for the hemlock and Douglas fir, and 10% for spruce, and then the lumber, all lumber, 10% as well. So that's impacting the trade, and of course, the March the 1st or thereabouts is this deadline where the 90-day truce ends, and there could be 25% duties, which will impact U.S. suppliers and so forth. But that's not the real story in all this. I mean, so the U.S. is impacted; they're negative, but other suppliers can benefit because if there's less supply, they can move in there and perhaps even get a little higher price in the interim. But the real impact is on the Chinese industry. This is what I'm really worried about, because Chinese exports, the U.S. market is a big part of their business, and if they're getting 25% or even 10% tariffs, but 25% tariffs, they can't ship to the U.S. and they've got to find other markets, which means probably less production, and that means they can't import logs or lumber to process this for markets. So this could be a very negative impact on the demand for wood in China, and therefore negative demand for prices. So that's something I'm very worried about, and we'll see what happens in the next month or so, or next few weeks actually. But that's the thing we're very worried about right now. So this is just the study I was referring to that we completed about the China supply chain. I'm just about running out of time, so I'm going to move a little bit quicker. But the ruble, of course, is one of the advantages for the Russians. It's been depreciating a little bit more than in the past. One of the colleagues that I talked to in Russia, they're budgeting for an 80 rubles to the dollar in their budget plan, over 80, and it's currently at about 66. So that means more devaluation is what they're budgeting for, which is more of an advantage for them in export markets. So the trends with Russia, I think you probably know this, but the log export trends have been falling dramatically. China's been the only saw log market. Finland is a pulp log market, but not much of a saw log market. So it's really the exports to China that drive the industry. That's the top graph, and then the bottom graph looking at the Russian sawnwood exports. And again, China's been the big growth market for their business. All the growth is going into China, and other markets are more or less stable. So that's the thing we're watching very carefully about. And in the report we've just done, we're forecasting increases for exports as well, especially into China because of their competitive advantage. And this just shows the trends historically, the production in the blue and the exports in the green line. So again, steady growth in production and exports. And one of the things that we can say with certainty now, which I never would have thought I would be saying this about 9 years later, but the Russian log export tax has indeed moved production away from log exports to lumber exports, as you can see in this graph with China. The The blue is the log exports dropping, and the green or the yellow is the lumber production increasing, lumber exports increasing. So very, very, very dramatic change as a result. One of the things now we're watching is this new log export tax for the Russian Far East. On January the 1st, it bumped up to 40%, and it's going to go to 80% by 2021. So that's going to basically knock a lot of log exports off the market. And that will then increase the ability for more sawmill capacity increases, more Chinese mills going into the Far East, and that'll therefore mean more lumber coming in to China is the bottom line in all this that we see happening. And so I guess at the the China border was the swing points we would monitor to see how much more capacity was being built at the border to process the Russian logs and or Russian lumber, more kiln drying, more value added if it was lumber coming in. But more with the export tax now getting more prohibitive, it's increasing the demand for sawnwood, and they can process it there. Or what we're seeing now, and more of the sawnwood is bypassing the border region and going directly to the end users in China as they built up a supply chain. So there's lots of dynamics going on, and probably the one thing that we've seen is this these block trains via the One Belt One Road. That's certainly been helping the Russians get into markets more attractively. And this One Belt One Road, which was always a foreign topic to me until about a year ago, it really means that they can especially from Siberia, they can access some of these rail lines. Well, usually this one here. And go direct, a train from one destination, one origin to one destination in China, and that's been really increasing some of their competitiveness. Although the rates aren't that much different, but the speed of the delivery is faster, and they're gaining as a result. So this whole One Belt One Road initiative has created more of an advantage for the Russians, because guess where all the Chinese mills are relocating? They're relocating along these rail lines, because if they got to move from the coast, they're trying to take advantage of the Russian supply coming in from Russia, and so we're seeing a lot more development there in capacity. And so as a result, where we see the kind of who owns the market, well, the Russians own the market in the red. So in the center here, and that area is expanding more to the coast and further south as well, as they're gaining competitive advantage. So that's again hurting other exporters who really are focusing more on the orange area in the southeast part of China. So we see, when we talk about Russian lumber, we see there's three different categories. There's Russian mills in Russia, Russian-owned mills, there's Chinese-owned mills in Russia, and there's Chinese mills at the border that have been processing wood. And that's where we're watching the whole, all of those industries developing and growing and finding their fit into the Chinese market. And the Russian-owned mills, typically some very modern mills in Russia now, they tend to be focusing more on commodities and a lot of structural materials. The Chinese mills, though, in Russia, they're focusing more on furniture grade and end-use products that the Chinese end users want and will pay a bit of a premium for. And that's where we see some of the displacement of the Finnish wood as a result. So again, that's the report we just released this week. So I'm almost out of time, but I'm going to talk a bit about margins and stuff. This is kind of a topic I know that Kai's always wanted me to talk about. We haven't updated our cost data, but this is a graph from a couple of years ago, and it shows, so Finland's on the left here. So the yellow is the margin, and the blue is your wood costs, net wood costs, saw logs converted to lumber, less byproducts. So our Finnish wood costs high? Yes, by comparison. No news here, I don't think. And are Finnish margins too small? Yep. That's our analysis back then. If I look at the log prices that have occurred since 2007, just looking at some of the Luke data, Log prices are up about €5 a cubic meter. Looked briefly at Finnish or at Swedish costs. They're up about maybe they're up about 5%. I think this is about 10%. Is that right? Yeah, about 10%. So the Swedish log costs seem to be up in U.S. dollars about half of that amount, and plus they have access to some fire-killed timber and windstorm wood now. So yes, there's some definite disadvantages for the Finnish industry in our analysis. Our next analysis will be done in about 6 months. We also do an analysis taking various costs and looking at it delivered to the U.S. market. Now, Finland doesn't really produce much dimension lumber for the U.S. market, but we've put in your costs to see how would you do if you had planers and so forth. And so this is sort of the analysis that we did. This is based on also 2017 Q2, so it's a bit old. But again, so here's Finland, and again, this is the total cost delivered to the U.S. market. So again, the blue is the net wood cost, and you can see that Finland had, aside from New Zealand, it had the highest net wood costs, and it had some of the highest delivered costs to the U.S. market. So you would be sort of what we call an incremental supplier on average, according to our methodology. So that's not good news. And you can see what the duties have done to the Canadian costs. That's the duties of 20%. So it pushes us up similar to where Finland is, and so that's why we're doing curtailments in the last few months, because of the high costs and low prices. And in the China supply chain report, we did a complete analysis of delivered log costs and delivered lumber costs to China. So I'm just sharing with you some of the, this is more updated information now, looking at the lumber costs to Shanghai. And so again, this is our analysis. Here's Finland. So we've got Finland pretty much as the highest cost European supplier to the China market by our methodology, and the gap is your margin. So when prices were up back in Q2 at those levels, there was a theoretical margin there, but prices now are down where, 240 or 250? So down about here. So that means that not a great market to be in right now because of the prices. So that's some of the analysis we've done, and it does show very clearly to us the Russians are over here, huge gaps, and at that in Q2 they were making very good margins, and we think they still are. And because the prices were very, very high in the U.S. market, actually it didn't actually wasn't very attractive coming to China back then, because there was higher returns in the U.S. market, which is part of what I was saying earlier. So that's some of the analysis we do. And overall, we see the Russia gaining a competitive advantage. That was to Shanghai. When you move the analysis inland to say to Chengdu, their advantage is higher and everyone else's is lower. So it's a pretty clear story. So last year at this conference, I gave an outsider's view. I don't think I can really add much more, except to say that I think Finland is well positioned in the China market. They love your wood. They just don't like your prices right now. So you have competition, but as prices improve, perhaps you'll gain it back. I suggested maybe looking at the U.S. market. It would have been a good call last year to do it. But if you took 6 months to get going, it would have been too late. So it depends on the market, but it's something to consider. Must be planed lumber, which I know is an issue for Finland, and always looking at alternate markets, which everyone's looking for. Kai showed that your other markets have increased dramatically, 100% increase. So obviously you have been doing that, so that's good. And the Middle East, North African market is unpredictable, but you just got to figure out where you fit. And other than that, I think it's just about trying to deal with your constraints along the way to see how you can better fit into markets. So I'm out of time, so thank you very much for your attention.